Welcome to the Modern CPA Success Show, where we're 100% focused on helping accounting firms achieve success. If you're an accounting firm owner who wants to learn how to grow your firm by providing virtual CFO services, then this podcast is for you.
Hello, everybody. Welcome to today's podcast. Very excited for today's show because we're going to talk about everybody's favorite topic, the CPA license, as well as the upcoming CPE that everybody has to get every year. So very excited for this show. Joined once again by Jody Grunden. And our guest today is Blake Oliver. So he knows all things CPA and CPE, so he's going to take us down this topic. Before we go down that road, Blake, I want to get a little bit of your background. So if you want to start there, welcome to the show.
Yeah, thanks for having me, Jamie. Thank you, Jody. So I am Blake Oliver. I'm a CPA. I got my start, though, as a non-traditional accountant. I was a musician, freelancing in Los Angeles. I majored in music performance in college. I went to Northwestern for cello performance, and I thought I was going to be a musician. Graduated into the financial crisis. Basically, I got my diploma, and then everything went to shit. So I don't know if you know a bit about how the accounting for film and TV works, but my dream was to go to LA and get into that, recording music in studios. Well, the budgeting for film works such that the music is the last thing in the budget. The last thing down the line. And so it's the first thing to get cut when budgets get cut because you've already spent all the money up to that point. So if you run out, that's where you go cheap. And so unfortunately, all of the recording gigs and stuff that I was hoping to break into, which is already difficult, kind of died out for 10 years, perhaps. Maybe not that long, but I realized I didn't want to stick around to wait. So I got into bookkeeping.
Yeah. So they tell you have 5 minutes for a song, basically. Everything will be done. Like you have 5 minutes to write a song for the show is what they'd say. Is that about?
Well, so that's
right?
My buddy. That's my brother-in-law, Zach, who's a composer. I was playing on the recording sessions, so they hire the musicians to come in and play, record the soundtrack. So I got into bookkeeping as a way just to make money because I've always been good with tech, and I sort of fell into it. And so as a non-traditional candidate, I kind of have a different perspective, I think, on the CPA accounting. I started a firm called Cloud Sourced Accounting in 2010 or so. That we were all online, all virtual, all remote. We only got leads from our website. This was kind of like a new thing back then. And for me, I didn't know what I was doing. I didn't know there was a different way to do this. So it just took off, right? There's a lot of demand for that, as we can all see right now. So I built that business for about 5 years, sold that to HPC, which is now Aprio Cloud. So by the transitive law of accounting for mergers, I'm a former partner at Aprio. I like to say that. So that's kind of it. I left public accounting. I guess after I sold my firm, I went to Armanino, which is the largest California-based CPA firm, to be a manager there. I thought, I'm going to learn how to do this thing for real. And I discovered, no slight to Armanino, but I discovered that most CPA firms don't know anything more than me about how to run a CAS practice or how to run an outsourced accounting practice. And after about 8 months, I got frustrated with the pace of change, especially with the centralized technology up in San Ramon. I couldn't get anything done my own way. I couldn't innovate inside of a traditional model. And so I got recruited to go into accounting technology to be a product marketer, to create CPE programs for accountants. So I worked at Flowcast and then at Giraffe. Last 4 or 5 years, I've been in tech. And I just set out on my own to do my own thing, which is a CPE company. And so, yeah, great to be with you. It's been kind of a wild ride over the last 10 years or so. I mean, I'm not kidding. 10 years ago, what is it? It's 2022, so a little more than 10 years ago, I was working as a barista at Starbucks. And in that time, since then, I've built and sold a business, and I've started a new one, and I've worked at technology companies. I've worked at CPA firms. I got my CPA. It's kind of amazing what you can do in this country if you just are willing to work hard.
Oh, for sure. That's beyond cool.
Yeah,
so
especially being a music major.
Yes.
Jeez.
Yeah, so don't
That's
ask me to get
awesome.
my cello out. I haven't practiced in a while, but so that's a bit about me. Yeah.
So kind of pros and cons. You started your own business, and well, first of all, you couldn't find anything in your passion, which was music. And so from passion to going on the other side of your brain to the accounting world, that'd be a huge jump all by itself. Just thinking through that would have to be a ginormous jump. And then going from that and growing it and doing something really no one's done. At that time, to be honest with you, it's probably you and I were probably we were probably the only two firms out there doing what we were doing, which is kind of cool. And then you got out of that a few years later, sold that, which is freaking awesome, and decided you wanted to go to basically go into the big firm thing, and that didn't work out for you. And then you figured that right away, and then you kind of jumped right back into technology, and now you're to the point where you're running your own business again. So you go from a business to being an employee to running a business. Why did you go back from the why did what was the big jump there? I'm an owner, I'm an employee, now I'm an owner again.
I'm a terrible employee. I'm just gonna say that, right? I think I'd be a good employee if I could work at a place that gave me a lot of authority, right? I need my own P&L. So I could be an employee, but I need to be an owner of a segment or something like that. I tend to get frustrated.
The autonomy.
Yeah. Like I said, with the big firm with Armanino, like my frustration there was centralization of IT. I had to put every request through them. When Microsoft Teams came out, remember that? There was a beta period, and it took me 8 months to get them to turn it on. I had to go through an approval process. Like, this is not uncommon. I don't no slight to them. That's just the way things run at a lot of big firms, and they didn't care about me as a manager, right? I had no authority. So, that's why I think that's actually one of the reasons why it's really tough to innovate inside of CPA firms, because it's so top down, right? Getting the staff and the managers to actually do something different. I mean, if you are an innovative person inside a firm, you fight against the entrenched way of doing things, and eventually you get fed up and you leave, like I did, and I left for a lot more money too. That's the other thing too. How do you compete? And we could get into the whole CPA profession and all that stuff, but when you can't innovate inside of traditional models and the pay isn't as good as what you can get in technology and doing other stuff, why do it's not a surprise to me that we have a retention issue in accounting and that we're losing talent every day. So I know every firm's not like that, and Jody and Jamie, your firm is super innovative and stuff, but it's a small piece of this big profession. So
Oh, for sure.
Yeah, Jody and I both worked in those environments where any idea was not going anywhere. Any idea you had was yeah, great idea. Put it in the box and we'll visit it in 5 years. We've all been.
And by the way, we'll give you a gift certificate for the idea.
I know. Exactly. I distinctly remember a month after I came in, I was sitting with the whole outsourced accounting team at headquarters, and I was showing off this new chat app. It was called, I forget what it's called. It was acquired by Citrix years later, but it was this team kind of chat thing before even Microsoft Teams existed that would allow us to collaborate on documents, like an internal wiki, kind of like Notion. Yep. And I presented it. I was so excited. This is going to change how we do CAS. This is going to change how we do accounting. Crickets. After I presented, crickets, total silence. No one had any interest in changing how they were doing things.
Well, even when we went remote, I mean, we pride ourselves on having such a forward-thinking team. But when we decided to go remote back in 2013, fully remote, man, it was like anarchy. I thought I was the devil. I mean, everybody looked at me like, "What are you thinking? There's no possible way we could do that." And it's like people, we're doing it for our clients. Why can't we do it for ourselves? And it's no, it just won't work. And it's why not? It was everything in the world, throwing at me. And then finally, when you kick everybody out and you force them to, I had to because I had to remodel the building and stuff, kicking them out and forcing them to come back, forcing them to figure it out for 6 weeks. After 6 weeks, it was oh, this is kind of cool. I do like this. And fast forward to the pandemic, the same thing happened to a lot of folks out there. Before we were talking in different things, even the smallest, I say small change, that's not really a small change, I guess, going remote, but that change alone was so looked at there's no way that our firm could do that. We're too big, we're too small. Whatever, you hear all the reasons for it. And now then after after the pandemic, now it's like people are coming up to us and saying, how do you guys do it? We need to figure this out.
Yeah.
We need to do this right, that sort of thing. And so, yeah, that change is just unreal. Accountants especially, they're the worst. And as an accountant, we're the worst, I guess, with change because we just don't like it. And it's got to be perfect, that sort of thing. In reality, life's not perfect and never will be.
Yeah. It's. I mean, in our defense, we're a conservative profession by nature, right? Like it's in our accounting standards that we should be biased towards being conservative in what we do. So I get that, but at the same time, there's just insane opportunity out there. If you're willing to take like tiny little risks, you can change your firm and do incredible things and double your profits and not be like miserable during busy season. Like, is it that maybe that's something we should question? Like, do we need all this work compression? I mean, I know that's been the way we've done it for decades, but that's not the way it always was. Like, we didn't have a busy season 100 years ago.
I can't imagine. I can't imagine that at all. Yeah.
Yeah.
Jay, what's your thought on that one? On busy season compression? I mean, you worked in the big.
Oh yeah, no, obviously I worked with, and it's funny, a lot of people think it's just tax, so people think it's tax and due to the tax deadlines, but I worked in audit, and audit was the same way. You had to get all the audits released within, 90 days. And of course those timelines changed as well, but you had to get all the audit opinions released. And so, yeah, I had my busy season, and yeah, it was just, it was part of the culture almost, right? Like you walked into a CPA firm and people said, okay, we know that January to April are going to be hell for you guys, and just live with it, right? And then your summer is going to be nice, and then first part of the year is going to be a little more interesting. But yeah, it's just it was part of the culture, and it was part of what everybody expected. So I think to come to a place like Summit where it's we've found a way to not have to do that, and again that's really made all the differences. Because I think the biggest thing is, and this is what I give credit to Jody and Adam for, is not being afraid to make mistakes, right? Like I know how many mistakes we've made along the way with every change we've made, and it's like a lot of people see it. Okay, if we do that, this could run us out of business. And it's like, well, no, you can change course if it's going to be that type of mistake pretty quickly. And so I think that's the biggest thing when it comes to embracing change, is not being afraid to make mistakes. And I think that's really where it comes from.
It might cost you some of your profits. You got to be willing to take that risk, right?
It did too. Believe me.
Yeah, of course. Yeah,
it definitely did for sure.
Yeah.
And that was just like getting rid of the billable hour. We track time. We track time to make sure everybody's job profitability and that sort of things in line, and we need to increase prices and that sort of thing, but we never bill by the hour, and it's amazing how that's kind of changed a lot of things that we do, because we don't have a ton of admin. A lot of firms have an admin for every 10 people roughly, because they're basically tracking and getting the whip out and all that kind of good stuff. And since 2004, we've been doing it completely subscription based. We've just zapped their bank account every Monday for the exact same dollar amount. We've got it built into our process that we're going to win majority of our clients on profitability, and our profit margins around 72-73%. For a client, which is awesome. And we know that some clients are going to be 40% and some clients are going to be 90%. We're not going to win on every one of them. And for an accounting firm, it's tough to take, because they want to win on every one of them. They want to, that 40% it just drives them up the wall. It's like, well, what do you do in that 40%? Well, you work with them and you try to get it closer to 70%, you adjust your pricing model going forward so that, that doesn't happen again. That type of thing is a discussion all by itself. But what we found is it's not needed, right? Because on the billable hour thing, I could talk about that forever, but people really don't bill by the hour anyways. When they
they're not
all the
really.
Accounting firms out there say we bill by the hour, It's like, yeah, well, what if the amount that you're billing by the hour isn't equal to last year? What do you do? It's like, well, then we write it up and we mark it up 5%. Right. It's like, okay, well that's exactly. It's like, well, that's not billing by the hour.
So I actually experienced this inside of a big firm. The problem with the billable hour, discouraging innovation, and I will talk ad nauseum about this. We don't have to make the whole episode about it, but I'll just say for our listeners that the big problem I ran into was exactly what you were talking about, Jody, where we were trying to measure profitability on every job, every month. So I was really restricted in how much time I could dedicate to particular clients, and the staff, if they became more efficient, they lost hours. So the staff I actually had somebody tell me, she's like, I don't want to do it this way. I like the way I'm doing it. You're going to cut my hours. And that's the problem that you experience is, and I experienced firsthand when I started my business. I was a bookkeeper doing data entry. I figured out how to automate 80% of my job. I was billing hourly previous. If I kept billing hourly, I would now be billing 20% of what I've been billing before. Does that make sense? No. Fix the fees, and then I get to enjoy the fruit of my labor in terms of the profits. Like why?
Exactly.
Yeah, exactly. If you are thinking about your pricing in terms of how many hours it takes you, you're going to lose money when you become more efficient. You're not going to have that flow to the bottom line.
Yeah.
So,
Yeah,
and it permeates the entire culture of the firm, where people like doing. The reason people want to keep doing things the way they're doing them is because they've figured out how to fill up their timesheet. So there's no reason, if that's how you incentivize people, for them to become more efficient, because all it means is that you're going to give them more work to do. You're going to give them more clients.
Yeah, I think to Jody's point, like that 40% profit client with a lot of companies, that'd be their best client, right? Because they're making a ton of money on it, because they're being super inefficient, they're billing a lot, and that's their favorite client. For us, that's our least favorite client. We are digging into that client. We're trying to figure out how to make it better. We're trying to build new efficiencies. And along the way, we're going to build some efficiencies that we can use on our other clients. They're going to get that 72% client up to 76%, up to 77%. So it's really like, we're solving the problem by going to that fixed billing, because we're not looking at those clients as our favorite. Like our favorite client is not the one we're charging 400 hours a week to. Those are our clients we have to get away from. Like, we have to fix this. We have to fix this, or they're not going to work for us anymore.
The traditional model is all about keeping everybody super busy, because it's all about utilization and realization and hitting that 80, 90% threshold. Well, I don't know what it really is, but let's say that's what your target, right, is to hit those billable hours. Well, so everyone's too busy to innovate. There's no time to actually try new things, because we all know, anyone who's tried new technology knows that the first month you do it, you lose, right? You do not win the first month, or even second month or third month. It's only after you've ironed out all the kinks in the process that you start to see real efficiency gains. And that's punishing to you if you're under a time-based model. People have to eat the hours. I had to do that. I was trying to innovate, and I was eating hours because I was putting in new systems, and the staff didn't want to participate in that. And so people we're just going back to the busy season thing. We're all just too busy. We're all focusing on revenue and not on profit margin, and it's killing us. And this is, I think, actually the cause of the Great Resignation in accounting. Is that the business model itself is failing to deliver good jobs, to good quality jobs. So, what student these days looking at social media is going to want to go into a traditional accounting job when they see, I'm billable for 55, I've got to work as much as 65 or more, and they're all remote now, so there's not even like the team camaraderie and culture that you used to get inside the firm. I'm just going to be sitting at home working crazy hours for what? Like what greater good am I doing in the world, ticking and tying, or auditing cash, or like whatever it is? Like we've just stopped being competitive. Accounting used to be a great job, but not anymore. The world has changed, and there's many other alternatives. And so, when I hear the AICPA and state society leaders talk about how, we need to go out to the schools and we need to recruit more people into our CPA pipeline and get more people to take the exam, I think that's like solving the problem the wrong way. We've got a bucket full of water. There's a big hole at the bottom of it. All these people are leaving our profession, and here our leaders are talking about filling the bucket up with more water. Let's plug the hole. Right?
Yeah,
the hole is really obvious. It's like too many hours and not enough meaningful work.
Yeah, no.
Sleeping at the office just isn't cool anymore. That's the thing. Like, it used to be a badge of honor. Like, hey, we're doing a restatement right now, and I worked 97 hours this week, and I slept at the office Wednesday night because we had to, get through these financials. And it's just not a badge of honor. Which again, that's definitely not a bad thing.
Well, it was great. It was great when you were getting paid a lot of money to work those hours. Right? I'm happy to get paid a lot of money to work a lot of hours. Right? And most people are. But like now, you get paid like $55,000 a year coming out of school to work 55 hours a week.
Yeah, no, that's tough. Yeah.
And the big firms are like, we can't recruit people. I wonder why. We're accountants. Maybe we should look at the numbers, right?
Yeah. The way I look at it, most firms are either tax or audit driven. That's their main focus, and really consulting is, in my belief, is where people nowadays want to be. They want to be consulting, helping business owners out, and that sort of thing. And so, if there's a way that they can make that shift from, where consulting used to get the leftovers, for the most part. You talk to any CAS program, and they're like, "Yeah, we're like the redheaded stepchild back
yeah.
here," that type of thing. And what they need to do is they need to refocus that, reposition that to where tax and audit become the small part, and that CAS program or that consulting program becomes the larger part. And I think by doing that, you're going to get more and more people in the profession wanting to be in the profession, because now they know they're actually making change. There's some autonomy. They're not just simply behind a desk crunching numbers. Nobody wants to do that anymore. They want to be client facing, working with clients, helping them out and that sort of thing. And I think that's the big shift. For those bigger firms, they've got to make that shift. Otherwise, they're going to be the dinosaurs out there, and these smaller firms will grow, and they'll grow fast, and they'll grow with their clients if they don't make that shift.
It's a tough mindset shift, though, right? Like, what tax and audit partner is going to want to, become subservient to the bookkeeping department, right? Which was always my problem. We were the bookkeeping department, and some of the partners still referred to us that way, even though we rebranded ourselves. And I think that they did that because it was a power move. It was a way of diminishing our contribution because they saw us as a threat. And honestly, it is a threat. It's a threat to the traditional career path. It's a threat to everything that we've been over the last, 50, 60, 70 years. That honestly, tax isn't that important anymore. And there's not a lot of opportunity in audit. Like, audit fees haven't increased. They've decreased. If you account for inflation, they've actually shrunk. Why is that? And, that's part of the reason also why we can't pay auditors more, right? Audit fees haven't increased. And my feeling is that it's because we as a profession have failed miserably to deliver value in audit. And this is a failure of our entire leadership, the regulators, the accounting leadership, to modernize accounting standards to actually reflect the economy that we're in. And I'm happy to explain this further. I say this as somebody who went into tech, because tech is, I think, the part of the economy that is least served by accounting. The way we do accounting, and Jody, maybe you can tell me this, like, because I'm an outsider, I'm a newbie, relatively. Has accounting meaningfully changed in 100 years? The way that we do accounting, GAAP?
No, it hasn't. Not until GAAP definitely haven't changed. The way we do things haven't changed. I think the only thing that's changed is just the service type. Like the CFO, the consulting, that sort of thing, really never existed when I was back in public accounting, 20 years ago. I mean, that wasn't even a thought. If you went out went out and played basketball with a bunch of people on the audit team, you got written up because you're getting too
much
well, I don't know what the term
fraternization.
was, but
Yeah.
it's like
Independence. You're losing your independence
it's like
because you're beating
seriously,
the
it's like
basketball.
I'm playing basketball with them and throwing up in a garbage can. That's not independent. I don't know what you're talking about, and or you can't joke with them. That sort of thing was like, it was silly. I got written up at one of the bigger firms for joking around with clients.
Wow.
It wasn't the client didn't turn me in. One of the partners saw me do it, and they're like, "Can't be that way with you can't be that way in front of clients." And they wrote me up, and it's like,
That's amazing.
wow.
That's amazing. I would have been
Well, I think that's
been
part of
ejected so quickly from that firm, Jody.
Oh, I
too.
was. It was like wasn't even 6 months later. I was gone.
That's amazing.
Well, that's what I always talk about for new people too, like younger people. And I remember my first audit, I was talking to an AP clerk, and she'd been doing this job for 20 years. And I was fresh out of college, didn't really know what I was doing. And I'm asking her questions, and I could physically see her hand shaking because she was so nervous. And I was like, okay, I'm not going to do this for very long. I don't want to make people feel like that, and I always had that in the back of my mind. So like to Jody's point, like I always tried to be friendly and nice and like be there to be like a partner with them. And of course that doesn't always look kindly upon in the audit world. It's like, yeah, I lasted 10 years, but the whole time I was there, I always thought about that first person I ever audited and how she was shaking, and she knew this job 1,000 times better than I did. I had no clue. I was asking questions on a piece of paper and writing down what she was answering. That's all I was doing. And they were making her so nervous. And I'm like, oh, I just don't want to do this very long.
That's amazing. So I forgot where we were going with this. It was, the audit. I don't think the audit has, I think there was a reason audit fees have stagnated, and it's because accounting standards haven't changed in 100 years. And
Right.
So you look at why let's look at the history of accounting. I actually wish the history of accounting was like a class that was required to get the CPA, because it would be so illuminating for people.
As opposed to some class that doesn't make any difference.
Yeah, yeah, exactly.
Folklore.
So our modern accounting standards, and modern in air quotes here, were developed, during the Gilded Age, to account for the industrial expansion in our country, railroads, for example. And these are capital-heavy, capital-intensive, massive corporations. And so all of our accounting standards really focus, when it comes to accruals and deferrals, on physical inventory and capital investments, tangible assets. We're really good as a profession about doing that, putting that stuff on the balance sheet, having all sorts of rules so that we can properly match income and expense. That was the big accomplishment of accounting back in the 1800s, was figuring out how to do that. And then, of course, we formalized it all with the SEC and all the regulation right after the Great Depression. But things haven't changed since then. And in that time, we have gone from an economy that is like 90% tangible assets to one that is 90% intangible assets. 90% of the S&P 500 market value is in intangible assets. And what do I mean by that? I mean like Facebook, for example, which has really no tangible assets of its own, unless you count its own infrastructure that it probably has. But most SaaS companies, most technology companies these days, they don't own anything. Uber doesn't own cars, right? And so when you look at the accounting for these companies, they're building intangible assets with a subscription-based business, but like the customer list, the subscribers are not on the balance sheet anywhere. And so we've screwed up as accountants, because now with those kind of companies, income and expense doesn't match anymore, because all of my sales and marketing expense to acquire customers is expensed. I'm generating all these intangible assets, but it's all going onto expense, which is why investors were really kind of screwed by accounting and missed a lot of the opportunity over the last decades, because all these companies looked super unprofitable. Do you remember when everyone was making fun of Amazon for not making money? But all the people who really knew what was going on knew that they were going to make a lot of money on a GAAP basis eventually, which now they do.
Yeah.
Well, but when they were in startup mode, GAAP showed them as doing horribly. So that to me is like a failure of accounting standards to modernize. Now, I don't have all the answers. I'm not saying we should necessarily put all of our customer lists on the balance sheet or whatever, but I think we could do a better job with disclosures and have standardized sets of disclosures for technology companies and intangible assets that would allow investors to get useful information. But right now, GAAP is useless, almost completely useless for valuing companies that are built on intangible assets. And when 90% of market value of the S&P 500 is intangibles, it's no surprise to me that the value of audits has plummeted, because what we are auditing isn't useful, and the end customer is the investor. So we have completely, as a profession, lost touch with who our customer is when it comes to GAAP. It's the investors. It's not our client. It's the investors. Sometimes those are the same people, but they're not supposed to be, often not.
Right.
So the output, the deliverable we're giving them, is not helping to manage the business. It's not helping to tell investors whether or not to invest. So they're going to other places for information. That's why data analytics is so sexy now, because I can tell a lot more about a tech company based on all their non-financials than I can about their financials.
Yep.
And so you want to talk about CPA irrelevance? I think we're already there. Baruch Lev did a study. I think he's at NYU, or he's a professor that Ron Baker likes to cite his studies a lot. He's very critical of GAAP. And he did a study that found that investors only use financial statements like 4 to 6% of the time. Like 4 to 6% of investor decisions are based on financial statements. That seems nuts to me. Kind of crazy,
I
right?
believe that 100%.
Right. So like if the finance,
And how much are they spending on those audits for 4 to 6% of the end product user
right,
using
right.
it?
So that to
crazy.
me, this is my theory, is the reason audit fees have stagnated is because the value has stagnated, has not grown of audits. And so if we want to actually make more money from the compliance stuff, from the audit stuff, we have to figure out how do we make GAAP more useful, the financial statements more useful, because then when we audit them, they'll, the audit means something. And also, like, the way we do audits is just garbage. Like, yes or no, it's pass fail. I mean, that's we could be why is it pass fail? Why do we have a pass fail system? And I think it's because we are lazy, or perhaps we are not wanting to assume risk, or we don't want to piss off.
Yeah, I think
go ahead.
It goes back to what we talked about in the beginning. I think you're still talking about the same people that don't want to change. And so you're talking about a big population of people that don't want to change. And you're talking about something they've been doing for hundreds of years in the audit standards. So why are those going to change when you're talking to not just one company of people that don't want to change, but a whole population of people that don't want to change? And so I think that's what it goes back to. I don't know if it's laziness or anything like that. I think it is really just their fear of change.
Yeah. Well, and that's the way I think of it. I think an audit opinion is a pass-fail opinion on a set of financial statements that are relatively meaningless. So that's why, and here we are, we're talking all about this ESG stuff, which is great. I think it's important that we deliver, climate change type of information to investors if they want it, but that still doesn't fix the problem that the underlying financial statements really aren't that useful. And I would love to see, like, if we had, why don't we have gradations of audit? And why don't auditors find fraud? Why don't we, like, that's, as an investor, like, I'm kind of flabbergasted that detecting fraud is not part of audit. I mean, what else are we there for? Oh, so
I agree.
It can be materially correct, but maybe this whole thing's a fraud. I don't know. It could be, like, that's what I'm saying as an audit partner. I'm just relying on what they provided me. Okay, that's real helpful.
Are you interested in offering virtual CFO services at your firm or scaling your existing service offerings? The Virtual CFO Playbook, How to Land $60,000 a Year Clients and Provide a Killer Client Experience, is an online series of modules that will equip you with essential tools for creating and delivering scalable VCFO services. These approaches have helped Summit CPA grow from $500,000 to upwards of $5 million in revenue over the past decade. If you're ready to grow your firm, visit summitcpa.net/VCFO Playbook to enroll now.
So how has Earmark really kind of helped you get how you battling with Earmark now? Now that you're the CPE of for accountants, how does that kind of go in with this? Because is it kind of contradictory to what we're talking about, or is it?
Well, so I love to, I don't know. I like to point out problems, which is, this is why I'm a bad employee, because, like, if we were in a management meeting, Jody, I'd be telling you all this stuff about your firm or whatever, right? Like, it doesn't go over well. So Earmark CPE is my new company where we provide CPE on your mobile app for listening to podcasts like this one. And that came out of the idea of, I think CPE is also one of those things that's kind of stagnated in our profession. Going to webinars, going to in-person seminars, like, it's old-fashioned. It's inconvenient. People do things on their phones now. So why can't we learn on our phones on demand, wherever we are, whenever we want? And so that's what Earmark is. It's a way to earn CPE. And also, I think in my small way, help contribute to changing the profession by bringing new voices to the profession. I'm not the only one who sees this. I'm not the only one who's saying these things. It's just they've been excluded from the dialogue, from the conversation, because the big societies and the AICPA are really rooted in the big firms. And the big firms are not interested in change. And it's not because they're bad people. It's because the business model itself is not adaptable, right? Even the partners at big firms are prisoners of the model, because you're not, and this was amazing to me when I discovered this, is like everyone thinks becoming partner is the holy grail, but it's not. You're really just a highly compensated employee. and your equity is all locked up in that partnership until you retire. So you're stuck. It's I don't know why anyone would buy into a traditional firm anymore. I can't. Do you really want a job for life? Some people want that, I think, but I mean, partnerships can be worse than marriages. You can't get out of them, right?
It's basically the same thing.
But you can get divorced. It's hard to get out of a partnership, a business partnership like that. So, so yeah, it's my way of like trying to help move our profession forward and offer a different point of view. And I'm very passionate about accounting. I don't know if you can tell, but I love it. I'm so glad that I found accounting and got out of music, because I find actually that what we do is super creative. And Jody, like you said, it has the potential to make a big difference in small businesses. Now that we can work remotely, we can be advisors, we can be consultants, we can really, really help them if we could just change how we think and think about accounting as serving the business, helping give information to the key stakeholders, as opposed to just this check-the-box compliance activity that has to happen. Until we do that, our services are going to have a low value, because it's not how many hours we put into it that determines the value. It's what the deliverable is to the end user and what they get out of it. So that's why like all the innovative accounting firms are switching to offering forecasting and budgeting and forward-looking financial statements. They're bringing in non-financial information to create business models and forecasts. And like that stuff's actually really interesting and useful. And it's exciting. You can charge good money for it. You can build a firm where you have 100 clients instead of 1,000 clients, and everyone knows that's a better experience.
Which is awesome.
Yeah, and you don't have busy season anymore, because now instead of all of your revenue being tax returns, 90% of your revenue is monthly ongoing bookkeeping, accounting, advisory, and then maybe 10% of it is their tax return, or 20%. It's flipped to the way it used to be.
And those people aren't working a bazillion hours from January through May. You know, we had one person on our team do that this year, and it wasn't a badge of honor. It was like, hey, you got to cut it out. You can't do that. You know, it was the opposite.
I mean, there are always those people, right? The rock stars and they respond to the incentives, and it's great if somebody wants to do that, if they are happy with that, that's great. But like most people, I'm a millennial. I'm 38. Wait, I'm 39. I started to lose. I'm getting to the point where I'm losing track, right? But my 40th is coming up, so I'm like on the edge, right? I'm like just at the beginning of it. But like, you know, we got Facebook when I was in college, so that's kind of like a dividing line of people who had social media and people who didn't. And millennials, the economy has changed so much from the boomers to the millennials and the Gen Zers that like our entire outlook on life has changed, right? Housing is incredibly expensive. So for a lot of people, the American dream of like the house in the suburbs and the 2-car garage and, you know, the family, it's gone, right? They aren't even trying. You can't afford it. And so people are saying, I'm going to just, you know what?
That
happens like half the time when I'm yeah, I should mute that. But I hope I didn't offend her. Did I say anything?
Nah.
She's listening. She's
I,
recording.
for one, support our robot overlords. That's for the record, just to make sure that in the future, Siri doesn't come back and Anyway, when the AI takes over, right? Like, I just want them to know.
That's right, exactly. Shut you off.
Yeah. But yeah, like people don't want to work the long hours, right? Like, so I have a lifestyle now where I moved from LA to Scottsdale, Arizona. Still not a super cheap place, but like half the price of where I was. It's all relative, right? So my wife and I, we both work. We can afford a home on one salary, which means we have incredible freedom and flexibility. Like if my wife doesn't like her job, if it goes sour, she can quit, go get a new one. Same for me. I can start a business. We have freedom. In LA, we had to both work just to pay the mortgage. And we don't have to take jobs where we have to work a lot of hours. So we are super involved in our son's life. I go pick him up from school every day. I'm the guy who does the homework with him. I walk to school. I pick him up. We hang out. We have dinner together. Like, why would I trade that? Why would anyone trade that for a job where I miss dinner with my family and maybe I don't even see them for like 3 months a year? And I think this is really, really hard for partners in traditional firms to comprehend because they have given all that up. They have sacrificed all that, and they expect everyone else to do the same. And the new generation saying, sorry, bud, I'm just not that excited by the thought of having a family that I don't know and then getting divorced like 3 times, like you, Mr. Partner, and being basically a miserable human being. Like, it's not healthy. It's not good, right?
Yeah.
Live to live, don't live to work.
Oh, for sure. And that's how we did. That's how we pretty much developed our company. You know, I was a hockey coach. I didn't want to work a bazillion hours during busy season. I couldn't because I was coaching, and so I had to figure something out. I had to figure out how we can do this so that it wasn't such a big burden on everyone. Because I surely wasn't going to take time off if everyone else is working a ton of hours. That wasn't going to happen. And you know, everything kind of revolved around the family. You know, how do we make it so that you know so people stay? Well, instead of maybe giving them big raises, you take them on a small trip. You know, Jamie and I, we went to had a great time in Scottsdale. Yeah, in Scottsdale.
Are you golfers?
You know, and that's something cool that most firms wouldn't even think about doing. They'd probably cringe on the idea of taking a person and their spouse to, a really cool retreat, that type of thing. But just as a thank you, hey, did a great job, appreciate it, that type of effort, those type of things I think really go the longest way, amongst everyone. The team retreats that we have are kind of the similar type of thing. They're designed for mostly just so people get a chance to hang out with each other. And we spend a lot of money doing that. Because we're completely remote, so you've got to, especially with millennials nowadays, like you said, they want to hang out with people, they want to have fun, they want to enjoy things, and with the autonomy, they want all that kind of stuff, and what we provide here at Summit's kind of cool because it's a remote environment where you get all that stuff too, and I think that's the proud part about owning the company. Is developing a company that people really enjoy coming to work with and really kind of get fulfillment from it.
Yeah, the meaning. They're getting meaning from
when they do
work.
leave, they're leaving for a job that's $20,000-$30,000 more, and high five to them. Congratulations. That's great. Good luck with your next profession and everything. That's there's nothing wrong with that, I guess, is what I'm saying. And so that's a cool thing. We can develop people, making them marketable, helping them build their resume, and then eventually when they move on, they're very high in demand,
awesome.
Which is pretty cool.
And like you said earlier, everybody loves that rock star, as you termed it, that wants to come in and work the 60 hours a week and does a great job and loves it. But you can't build a firm on that anymore. I truly believe that. I think you can have 1 or 2 of those in your firm, and you'll be lucky if they last a year or 2 because eventually they're going to burn themselves out. I'd rather have a person that's working 45 hours a week and occasionally has that 30-hour week or coaches and does all that stuff, but lasts with us for a long time because that's a lot more valuable for us. So, with that said, we are right up on time here, so I want to give each of you guys kind of a final thought. This was a great conversation. We didn't talk a ton about CPE, but I know we talked a little bit about the podcast transition there. But final thoughts, a lot covered in this show. So I'll start with you.
Sure. Well, if our listeners want to learn how to get CPE for listening to podcasts like this one, go to earmarkcpe.com. Download the app for Apple or Android devices. You can sign up for free. It's completely free. The CPE is free. I know it sounds crazy, right? We're gonna have a premium membership at some point, but we will always have a free tier. So you'll always be able to go and get CPE for listening to podcasts. And yeah, please join us. You're gonna hear some amazing voices you've probably not heard before. If you liked anything of what I'm saying, I think you'll like what you hear. It's really innovative, and you don't have to just listen to me. It's not just me. I know people get tired of listening to me. So that's why it's all about other voices, and we've got this show on are we getting this show on Earmark? Is that what's the plan?
Mm-hmm.
Yeah.
Yep.
Excited.
That's the plan.
Yeah,
Yep.
Sure is.
That's awesome. Thank you both.
Yeah, for sure.
All right, Jody, what's your final thoughts here?
I haven't known Blake, but I've known of Blake for a long time. Actually, I didn't realize his prior thing before draft, but we met we met on the draft side and on the forecasting side as we're looking for different tools and benefits, and then to follow him, outside of that, and now to be joining him on this new platform is really super cool. Because the platform's innovative, which is kind of neat. It's podcasts. Everybody listens to podcasts, right? I mean, I do. Jamie does. Everybody listens to the podcast, and probably not everybody, but I'd say most everybody. But anyways, it's kind of nice. Well, hey, I can earn some CPE doing that and learn some stuff, and it just makes it it makes it a lot nicer. What you're doing, Blake, is pretty cool, and I can't wait to see what it looks like. When it becomes the Facebook of CPE.
Well, we're gonna try to. I think it could be big. That's my hope. I don't want to have another job if I can avoid it.
Yeah, I don't blame you.
Yeah, no, I think it's a great idea. I love it. I really think it's an innovative and smart idea, and I'm excited to be on there as well as to enjoy the CPE. Because I know every other year when December comes, I'm like, oh crap, I have to take a bunch of classes now because I didn't get enough CPE.
They're always the stupid ones, like Blake said, right?
To give it a throw. Yeah, the ones where I have to take tests and it's like I can't even understand half the words in the test because it's stuff I'm not even doing. I'm just doing it to get credit. I'd rather actually get CPE for stuff I enjoy doing. And to Jody's point, I've been listening to accounting-based podcasts for over 10 years now. So this is
well, my hope is that you'll pick up the app every week and do an hour, and then end of the year you're done. You've already done it. You've done it.
For sure.
Exactly. So we're trying to get everything
Makes sense to me.
Yeah. So we're looking for tax content. We are looking for like the really technical stuff that people want. I would love to hear from you and from your listeners, like what is the stuff that's really in demand? I know it's not just like the practice management stuff, but we also want like everything, right? Ethics, tax, accounting, audit. We're working with some cool audit for tech companies and trying to get their content on there. I think that's actually a big, huge opportunity, for audit is to, even if we don't make the accounting standards change, like everyone still has to get an audit, right? So improving efficiency there with tech. Oh my gosh, so much opportunity.
So for companies that are looking to potentially be on the podcast, reach out to you. And how would they get a hold of you, Blake?
Blake at earmarkcpe.com. Just shoot me an email. Let me know if you want to host a show. It's free. Do you want to like put up content? It's free. We just want to create the world's database of accounting knowledge that everyone can draw from.
Yeah, sounds great.
Great. Awesome. Well, definitely appreciate you coming on the show. This was an awesome conversation. I'll probably even listen to this one for some free CPE.
Yeah, I wonder if we can get you the instructor credit for this. I got to
that'd be nice.
The double.
Now, don't give him one. I thought giving me one. That's not fair.
We'll have to figure it out for both of us. Thank you, Jamie. Thank you, Jody.
Yeah,
thank you.
Thanks a lot. Appreciate it.
Enjoy this podcast? Visit our website at summitcpa.net to get more tips and strategies for achieving modern CPA firm success. We're here to be a resource in this ever-changing industry.